Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market update for this Monday, the 8th of October, 2018, just after 4:43 p.m. Central Daylight Time. Stock market didn't do as bad as it started off. This market was in the hole, and it came roaring back. As you can see, the market, basically the S&P unchanged. The Dow actually higher, came back almost 300 points off its lows. Metal still on the weak side. The dollar stronger. The cash bond markets were closed in the U.S. due to Columbus Day, so you can't really tell what was going on there. When China reopened, we did see their stock indices come down. They had a week of being closed for holidays. So let's go to the S&P 500 index and see what we're doing. We're in a correction phase. We saw a high close on a weekly chart of 29.34, and we've been working lower back down to 28.93.75. When I switch over to a daily chart, you get to see, and it started right here. Remember we were talking, look at this consolidation area. Then the market tried on the downside. The question was it going to fail like it did here, or is it going to come back? It extended through here on Friday. Today it went down even further, but finally found its footing. And it found its footing against this prior break low in the 28.75 level. But there's more numbers that come into play. Are we trending by the definition of making lower highs, lower lows? We're not. I say lower highs, lower lows because you can see the price break. Why talk about an uptrend? It's not a correction. What you've got is a market with a higher high, lower low. I call that no trend. Where's the battleground? It had been the 18-day average. You extended down today, found your footing, and you found the footing again against the lower Bollinger Band. So if you've been trying to push out, or traders trying to push out as a group on those Bollinger Bands to the upside or the current downside, they haven't succeeded. The market's been faltering there and here. In other words, it's more or less in a trading affair, marking time. In terms of momentum, momentum is still pointing down. You can see that right through here. So what we have is a market with downside bias that is finding support at the lower Bollinger Band, resistance 29, let's call it 29.17 for lack of anything else, and bigger resistance 29.43. This is where the market has to support itself. If it starts taking out lower lows, you do put into play the possibility of going back to the 100-day moving average of closes, the way that you did in the NASDAQ. Now, the NASDAQ extended on Friday to the 100-day average in green to today, came back. It's still under the Bollinger Band, 2 days in a row under it, but this market, when it reopens, will probably be in oversold territory. It's also in a downtrend. Having been in a downtrend, lower highs, lower lows, it's hit the first objective and now the second at the 100-day. That doesn't mean it can't go lower, but my guess is this market, for no reason at all, can get a bounce going in it. In the Dow, you left the uptrend today. This had been on its own the strongest of the indices. Those 30 industrials just continued, as we know, making the higher high closes, and it got all the publicity. The market peaked out against its upper Bollinger Band, and no, it doesn't always do that, friends. It did, though. Fell back to the 18-day average, and with the break today, got under the previous break lows, in fact. So now you've got a pattern of a higher high, lower low, momentum down, bias up. You have nothing on this chart. Everything's fighting each other. Let it decide what it's doing. The weakest of the charts has been the Russell, and I think we've been saying that. You even are about to get what's called a bearish crossover, where the 18-day average is likely to get under the 100-day moving average of closes on the reopen. That puts that as strong resistance area on the chart if and when it bounces. As you can see, the momentum, unlike the other charts, is not pointing down. It's embedded. It converted itself over a while ago, and it's just saying that on hard rallies, this market keeps getting sold, and we haven't had a hard rally. The market gets these rallies. It's struggling to stay over the lower Bollinger Band. Only 5% of the time do you stay under that. So today's close of 1634 is under the Bollinger Band. Friday's close of 1639 was under that band. The day before, you closed 1650. That was 3 days under the band. You were over it here. The odds of it closing under the band tomorrow, the way that I use my rule of thumb, that out of the 5 percentage points that the market will close outside of the band, if they're consecutive, gives 2% chance tomorrow. That's not strength. It just means the market's going to try to move over. The embedded reading is the strength to the downside. In the VIX, I think the pros stepped in on Friday and again today. On Friday, actually, I think they sold the market and were able to cover it at the 18-day average of closes if you watch the in and out action. I would be surprised if they didn't go short at the upper Bollinger Band again today, writing calls, looking for the retracement into this general area. Obviously, this is predicated on the market not making a big move to the downside and just crashing. But so far, that theory has been a pretty reasonable one. Can it get away from you? It can. Anytime you're writing a call or a put, you're taking on risk that's very different than buying a put or a call. The difference is you're catching the premium in the market. Otherwise, you're paying it. As you take a look at the T-bonds, you're running the lower Bollinger Band. So the question is, when is low enough low enough? I can't answer that. I can tell you the market's riding the band. You're now 3 sessions in a row under the band. I don't think you were right here. Let's see. You closed 138.16. Now that's 4 in a row. So the odds of tomorrow not getting a day where you bounce back over the lower Bollinger Band, I want to go on record, 1%. So I expect the market to bounce. What about the embedded reading? Do you have one or you're just oversold? If we come to today, both numbers are under 20. They were both under 20 on Friday and Thursday, not on Wednesday. I'm going too fast there, but I can only work this so much. So when and if the red line closes over 20, I would expect price to try to zoom back up towards that 18-day average of closes. I'm not saying it's going to happen here. Right now, as long as it stays embedded, I would expect the rallies that you get in the market to still be sold. So the market looks to me like it's building in a big chance of a December rate hike, barring something in the world going crazy. Same in the 10-year notes, but the difference here is this market popped back over that Bollinger Band. Is this market embedded? Both numbers today are under, as you can see, 20. They were under 20 on Friday, but not on Thursday. So unlike the bonds, the longer term, this is not. It's just an oversold market, overextended, probably ready to do a bounce. As we come to TLT, which are programs just calling up from the server, sometimes it takes a moment. Here too, you've got 1, 2, 3, 4 days in a row under the lower Bollinger Band. Notice how the bias has stayed. And this is a rule of thumb that I teach in my charting course. Understanding that you get bias from moving averages, and do you trade against that bias or do you use that bias as a filter in your ideas? I'll leave that up to you. I know what I teach. The market has the embedded reading, 4 days under. The odds strongly favor it's going to move to the right hand of the Bollinger Band. Even if it doesn't, until you lose the embedded reading, you're bearish. In the dollar index, you're overbought, fighting a battle, a real battle against that upper Bollinger Band. Admittedly, you're in an uptrend, but you're being stymied in moving higher. There will be a number where high is high. It comes that simple. Eurocurrency, it's the opposite. The market keeps breaking down. In fact, today you got as low as 115, what is that, 115.22 and a half. So this market's still acting rather poor. The trend down, the bias down, but very oversold. So we have both the dollar overbought, the euro oversold. The British pound, you know where it's stuck. The 18-day average of closes. Even if it pops here, you've got the 100-day average waiting for it and resistance. Today's rally in the market at 131.74 was high enough to take out a previous high. You're not trending. You're going sideways again. Remember, you're only months away. We're already in October. What do we have? 6 months before Brexit one way or the other, and I'm going to use that one way or the other. You can flip a coin. Is this thing going to be a soft or hard leaving of the EU? I was surprised at the strength today in the end. The market on Friday still looked to me to be bearish. It did lose its embedded reading, and last night it kept flirting with trying to give it up, didn't. Now it got up to basically the 18-day average of closes. That's the goal when you lose the embedded reading. It's hit it. It's ready to now, it's neutral as I'll call it. Bitcoin still in an uptrend, higher lows, higher highs. WTI crude, you can see how it's losing to the Brent for a little change, and it stepped out of its trend. What really happened today to change some of the picture, I believe it started changing a bit on Friday. Somebody knew something. It looks like the Trump administration is going to give some exemptions on time for India and maybe a few other countries to still import Iranian oil. I know India had committed through November, so that's what they're talking, but the U.S. is saying with those exemptions, you've got to keep cutting your supplies down. And that added that little bit of supply onto the market. The market lost its embedded reading. I wouldn't be surprised if price and the 18-day average try to come together. Same in this, the WTI, that was the Brent. You're already doing it in the rebob. You had lost the embedded reading on Friday. And natural gas, up and away because of one factor, cold weather now. We're back into talking that, but look at this run. Since this market cleared right here, and I know I pointed that out over and over, they caught a group of traders coming out of this area, and it just exploded. That is why when you're wrong, or when you're right, you try to ride the trends. But when you're wrong, you don't wait for the next day off, and you got to at some point say, I'm wrong. And I'm not talking me, I'm talking how you trade. My silver report, it's ready. My subscribers will get it tonight. If you're not on my mailing list and you'd like to get it, and I've got more charts in this one than I've ever put in a silver chart report, call me, go to my website. I come up with a trade for you towards the end of the year, by the way, in this, and you'll see why and where it's from. Doesn't mean it'll work, but I point out some interesting things for you in it. So I'm not going to tip my hand. I want to get you the report. Do that, or you can click up here to get it. I'm Ira Epstein. You have a good day.